Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now, the markets are shaky right now, and at such a time, more investors are nervous, fearful than being confident. So, is it a good time to invest in multi-asset funds? Since they invest at least 10% in 3 different asset classes, will they help you mitigate risk? Well, that's what we'll talk about in today's episode with Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
Now, first of all, why don't you tell us what are multi-asset funds? Like, how are they different from multi-caps?
They're completely different.
Yeah.
One is that these multi-asset funds are hybrid funds. They are supposed to invest in equity, debt, and commodity. All other kind of hybrid fund, whether it be conservative, aggressive, or a balanced fund, they invest in equity and debt. And they are, they are designed in a manner which has a purpose. The aggressive fund are relatively more stable than an equity fund because they invest up to 25% into fixed income. And likewise, the balanced fund, 50-50 equity debt, and it is even more stable. Or conservative, even more conservative allocation fund, like 25% into equity and 75% into fixed income is far more stodgier, and it is able to, it's likely to beat inflation. So these are the hybrid. This is the variety of hybrid funds that investors have to choose from. This is completely different. This is, besides being multi-asset, that it will invest in equity, debt, and a commodity, which generally is gold, and it should be investing a minimum of 10%. But more importantly, here the fund manager is given the flexibility that he will be investing at least 10% in the other two and can well go up to 80% in one. So it can well be a 80% equity fund. 10% into fixed income, 10% into equity, 10% into debt, or 80% into debt and 10% into other two. But I don't think the funds have been able to leverage this particular enablement for these funds in the multi-asset fund. Multi-caps are forced to invest in all kind of stocks. And they must necessarily have at least a quarter of their investment, 25%, into large, mid, and small. I don't think multi-caps and multi-asset funds are comparable. I think we have to look at multi-asset fund in comparison to aggressive hybrid fund or a balanced fund where 2 assets are combined. So it is more diversified vehicle with a greater freedom for the fund manager.
Okay, and what is attractive about multi-asset funds?
The attractive thing about these multi-asset funds is that they have been able to withstand the declining phase of the market much better, even as compared to aggressive hybrid funds or an equity fund, quite substantially. Not that they don't fall, they do fall. But I think they have been able to, protect the downside better. Besides that, there is one more advantage, that these funds, because of their asset allocation, and if fund managers do comply with allocation, they can well fall into neither equity nor debt, which means that they will be subject to indexation. Right. And most funds of late which are launched, or most funds which have existed, they're trying to pitch themselves that they will try and be, they will keep their asset allocation in a manner that they will be eligible for indexation. Otherwise, for all Indian funds, either they fall into equity or debt, and the debt funds are not, all the gains from debt fund is completely taxable. Equity is available for, 10% capital gains on, long-term capital gains, or 15% short-term capital gains. Here is something which you can hold for a very long time. You don't have to pay any taxes till you realize it. And whenever you realize it, post-indexation, you will be liable to tax. So it could be a tax-efficient vehicle. But I don't think that should be the primary criteria for which a fund should, an investor should be choosing a mutual fund.
So what's the case for multi-asset funds then? And is it a good time to invest in them?
Yes, they have been able to build a modest case that, if we are fearful, then they will fall less. And in the past, they have been able to demonstrate that they have fallen less than aggressive hybrid fund. Of course, my expectation from these funds was that, they should do magic. The magic is because they have the flexibility. They are the only kind of fund which are enabled. that they can be 90% into other two, and they can be almost 80% into equity, and they can be just 10% into equity, which no other category is enabled.
Yeah.
So I would expect that some funds, if they are able to do this magic even once in 5 years, it will have a lingering effect. But as I have understood that it is a very hard thing to do, and it's timing it perfectly. But within the limits, within the framework they operate in, they have been able to build a modest case of protecting downside much better.
So is it a good time to invest in them?
Yeah, for all risk-averse investors and beginners, it can prove to be a good vehicle, because it has been able to demonstrate that it falls less in a crumbling market. And these set of investors, they are the ones who are most vulnerable in a market like this. The moment you invest and you see that the market has gone down by 10%, 15%, 20%, which it does often, howsoever for a short period, but that is quite unnerving for them. Right. This is proving to be a good vehicle. But I would say that don't get into mutual fund with a tactical orientation. Most people have their own plan. You earn 50,000 rupees. With difficulty, you are able to save 7,500 rupees. And you are investing it for next 10 to 15 years. And you are investing for the first time. You'll be greatly upset. Maybe start with an aggressive hybrid fund, or maybe this kind of fund, maybe conservative fund. Then after 1 or 2 years, because you have to experience a declining phase of the market before you get into equity. That is actually I think it should be a mandatory acclimatization for most investors. Let it fit into your plan rather than make a plan because there is now a multi-asset fund.
Right. So why should one not invest in multi-asset funds?
Because for the long term, you should invest in equity. And for the short term, you should invest in fixed income. And before that, these hybrids have a case for themselves, have been able to build a case for themselves that they help you get entry into the market or a market-linked investment in a calibrated manner. So that is a case for them. But if you are going to invest for next 20 years, start with these and then move into a multi-cap fund. And if you are actually likely to need the money in 2-3 years' time, then start with this, and after 2 years, move that money into fixed income so that there is no uncertainty about that money.
So I hope that makes it very clear for all of you to understand why you should invest or should not invest in multi-asset funds. Well, that's all we have for you in today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.